So welcome back, everybody. Today's guest is Mark Quann, who is the founder of The Perfect Portfolio, a tax strategist, and author of the Top 10 Ways to Avoid Taxes, and also his latest book, which is Be Smart, Pay Zero Taxes, where Mark explains how everyday Americans can use the buy, borrow, and die strategy to build lasting wealth. Thank you so much, Mark Quann, for joining us today.
Man, excited to talk to you, man. I was watching your show earlier. You guys go into all kinds of things. Just don't ask me to give up coffee, man. Like that. That's about it.
He was miserable. He was so miserable.
Yeah, I was definitely miserable on the 3 months of no coffee, no alcohol. But yeah, we talk about anything here. You know, like the average American, or in your case, Canadian, is just interested in a myriad of topics. So since we're talking about your latest book, the Be Smart, Pay Zero Taxes, you discuss specifically the buy, borrow, and die strategy. And if you've ever read any book on like how the elites basically avoid paying taxes, they use the buy, borrow, and die strategy. I mean, I think there was a few years back where like even Jeff Bezos, who at the time was the richest person in the world, was getting a refund check from the government for like $5,000 when he had like children, you know, like even Jeff Bezos was getting a government check. Yeah. Which is insane for the average person to think about. So what actually is the buy, borrow, and die strategy for those that don't know?
Okay. So first of all, it's crazy that you'll never learn it if you go to an elite financial school. Even like the Ivy League schools, you'll never learn buy, borrow, die. If you go to the university where it was coined, University of SC, they won't teach you the strategy. You become a financial advisor, CPA, they don't teach you the strategy. It's the best strategy for building wealth and legally avoiding taxes. And anyone can do it. Like anyone. Yeah, it's just, you got to invest in your financial IQ a little bit. Yeah, buy assets. Never sell the assets. Rather than sell the assets, which would trigger the taxes, just take a loan secured by that asset to buy another asset. Now you have two assets. As they appreciate, don't sell them. When you have two assets, borrow from those and buy a third asset. And you can just keep doing that over and over and over. You're literally circumventing the tax system because you don't have to work for the money. You don't have to spend your time. You don't have to work for it. You don't have to pay taxes. And you're actually battling inflation with inflation. So the three things, which is your time, taxes, and inflation, you're literally just ignoring them. You're like, oh, inflation makes me money. We love it. Because technically we're inflating the money supply with debt. That's what the rich do. And it avoids having to work hard, which is kind of cool. It's better.
Yeah. That's incredible. I sort of want to dissect it. I take it this is in practice. Like you probably, tried this at some point and you started buying properties.
Yeah, it's crazy part is just giving my background. I've been out like 25 years ago. I came to California. I don't have a high school or college diploma either, so I'm like a high school dropout and then a college dropout. So I was like, I wanted to get good at dropping out, so I did it twice. And I was in college for like business and finances in Canada, and I was like, this is a scam. I was like, this whole deal scam, credit cards, student loans. Yeah. Go get a job. I was like, oh, this is a scam. I'm going to the United States. So like, but he jumped the border and came to the United States, went to California for 25 years. And then I got heavily into finance. I read Rich Dad, Poor Dad, and I read Paul Kiyosaki's books, and I just started reading. And then I went to classes just learning how to trade stock options. I spent like $5,000 on a stock options trading class in Vegas and whatever. And I learned how to do this stuff, and I was immersing myself in financial education. And then I got recruited into the financial industry. And I was working with a guy named Patrick Bet David. I don't know if you know PDB.
Yeah. Yep.
Patrick I was in his office and when he was broke in Northridge, and Patrick is hammering on me, forcing me to do public speaking and all that stuff. Patrick Bet David taught me to sell insurance kind of. And then, he went his direction, and I became a financial advisor. I got all the fancy licenses, fiduciary, investment advisor. I was training teams, speaking on stages, like New York Stock Exchange, all this stuff. I was like and I just like, so I was like, man, nobody's retiring. Like, the CPAs are working at their desk until they're going to die. They don't know how to retire. They don't know how to not pay taxes. The financial advisors are really worried that they're going to have to work until they die. They're 60, 70 years old and they still have to go to work every day. I'm like, this is weird. Like, nobody is winning. What's up with that? So 2018, I had a tough decision. I was writing top 10 ways to avoid taxes, and you're not allowed to be a financial author and be a financial advisor. Those two just don't mix. They go, either you write a book, resign, you can't be a financial advisor if you write financial books. I was like, that's weird. Like, cause all the better strategies that I would like to use, I can't teach to my clients because they will get fired for it. This is not cool. I don't roll this way. I'm an entrepreneur. I want to innovate and disrupt. And I was like, this is not it. This whole thing is a scam. So I resigned. It cost me like, I don't know, it was like $250,000 the first year. So it cost me about $1 million in the next 5 years to resign. And yeah, it was expensive.
Yeah.
But
you wrote the book.
What am I going to do now? Yeah. I wrote the second book, and then I created another company. I used to do consulting for like rich people in Beverly Hills and Malibu and La Jolla on how to not pay taxes. We started the company. I'm like, oh, I got a new company. And then coronavirus killed it. I was like, oh man, there goes another one. And then that's when I just sat down and I started built this thing called the Perfect Portfolio. We learned this buy, borrow, die strategy. At the time, we were borrowing at 2% interest, and we were buying what's called a covered call that paid 12%. And I was like, this can't be real. Like, what? and then we ran like 500 students through a beta test for this course, and boom. And then a major publishing company called me and said, hey, can you write a book on this? So I was like, I'm pretty busy, but let's roll with it. And so I wrote Be Smart, Pay Zero Taxes.
I forgot to introduce Kai Primo as well. Usually Kai Primo doesn't join us unless it's for like a special occasion. So today's guest, of course, is the author Mark Quann, the founder of the Perfect Portfolio, and my fiance Kai Primo. So Kai Primo is also in the house today. So Kai Primo, ask your question though.
Thanks, Jess. No, I was just really like, when he told me that he was going to have you on and we were going to talk about, these sort of strategies, like our audience, our data shows that our audience are about, the 35 and over 50 range. And I'm pretty sure the majority of the people that watch this show, have the same like varying questions and like, I'm going to work forever. I'm never going to retire, or, I never really put away a nest egg, in my 20s and early 30s. We're sort of like in the middle of the life and we have nothing. It's like, they just like, it's like, what do I do when I can't move and work anymore? How do I do this? And I think like, this is such an essential topic, like really valuable that you can, share with us, because everybody has these questions like, what do I do when I get old? And so you're saying that it's really, would you say that it's not too late if you're sort of like in the middle-aged and you don't have a nest egg and perhaps you have debt, like you can do this strategy, starting to buy property, borrow against it, and then, on and on and on, and sort of still build wealth so that, you'll be safe when you're older.
Yeah. And real estate is great, but you can actually start with smaller dollar amounts. You can start with $100 in a brokerage account. We start everybody the same place, put $100 in a brokerage account.
Okay.
We see stocks, ETFs, life insurance for asset protection, real estate, cryptocurrency, and gold and precious metals. We don't buy an asset unless we're able to take a loan from that asset to fund another asset. I call it dead money. So anytime you invest your money and you can't take a loan from it, you kill the cycle of buy, borrow, die. So don't kill your money. Only invest in things when you can take a loan secured by that investment to buy another investment. We hate bad debt, credit card debt, all that stuff, garbage. Yeah. Get rid of that, right? Mm-hmm. You really gotta, and then raise your financial IQ. You got to spend at least, so let's say somebody buy the book, spend 100 to 200 hours this year studying the strategies. There's tons of YouTube content out there. We developed it. We have courses on it. We can teach it to you. If you invest your 200 hours, you're going to change your legacy forever. And you can retire early. You could start from nothing at 50 years old, and you could be financially independent by 60 pretty easily, as long as you have
10 years.
Yeah, pretty easy. Yeah, you can look at my brokerage account on, we have YouTube overviews we've been doing for years now.
Yeah.
Look at my brokerage account. I get 166,000 in that. I generate over $4,400 a month in dividend income alone. So your retirement can be pretty fast, actually.
Wow, that's really interesting. I didn't think it 10 years, unless you build a business or start something crazy. But I didn't think investment. I thought like, investing, like you'd need, I almost even feel like sometimes it's like, man, would it be too late if I didn't put money or start investing at 20? It feels like, oh, it's too late. Right.
Yeah.
But,
Well, when you
but
say
let's say,
investing, yeah, go ahead. Sorry.
let's say you put the $100 to an ETF. That's what you mentioned as one of the strategies. And you said if we do put it on an ETF, you're saying we can borrow against that? That's not
Well,
the case, right?
you need over $2,000. The federal laws say you need over $2,000. So you need to invest, and you start with a small dollar amount and you invest. Let's see, $4,000 in your account now, and you're like, I need $1,000 to pay something. Don't liquidate your account. Take a margin loan, borrow $1,000 and send it to your bank account. Right?
And you do that like you're in Vanguard. I'm literally dissecting the to-do. So you go to Vanguard, you borrow against your stock portfolio. Get out.
Correct. You just can't do it on Vanguard. You can't do it on the big brokers. You can't do it there. There's only two places it works. One is M1 Finance, and the other one's Robinhood. Right? So those platforms work very well. M1 is really simple. Like you can actually see the interview. I interviewed the founder of M1 named Brian Barnes on the YouTube channel. It was awesome. It was like he came from this wealthy family, investing since 8 years old. His friend was a billionaire, Ivy League school, and I'm like a high school dropout. Right. And here we are just talking about buy, borrow, die. And he built the best system for it. And then I just wrote the book, and I love the platform. So yeah, so you have to understand where to do it, how to do it, and realize they'll kill your money. Retirement accounts kill your money. All of them. All retirement accounts are horrible investments, in my opinion.
So
with the exception of Roth. With the exception of Roth.
Okay.
There's times for it, but IRAs are horrible. I mean, they're what a bad investment. Imagine investment account. You get a tax deduction now. The better investor you are, the more the government takes from you in the future. When you retire, you're going to pay massive taxes for the rest of your life. The chances of running out of money are very, very high because you have to liquidate it and pay taxes. If you had $1 million in a retirement account right now and you retired, you get to live off $33,000 a year. Minus taxes.
Yeah, that's not enough.
That's at $1 million right now. Yeah. It's like, oh, but I'll have my $1 million in 20 years. Okay, good. You're going to retire off $15,000 a year. Whoa, $15,000 a year. Like, who's excited about retirement of $15,000 a year?
That's like a pizza on a Friday night right there.
It is.
Good Lord. So, but you're saying then, okay, let's hypothetically say, okay, we had $100,000 on a brokerage account, and now we want to now we want to get more assets. So we borrow against that. Let's say we put a down payment on a house, and then now you rent that out, and now you're continuing on the buy, borrow, die system, if you will.
You're talking my language here. So I love real estate, right? So, real estate you can buy with none of your money. You can literally buy a house with no money. Like, yes, sign a piece of paper, buy a home, pay some closing costs. You're like, I got a $400,000 house. I literally did no work and I didn't pay taxes on it. So you have to understand that debt is people think debt is bad. Debt helps you not pay taxes. That's the crazy part about it. Like it's great. So no, you can have investments and you fund them, grow them. You'll never pay taxes on the growth. And then you can borrow to buy real estate. Your down payment can be a loan. When you sign the mortgage document, that's a loan. You never pay taxes on any of the money. You just created money by pressing a button, taking a loan, sending it to your bank account, sending that to the bank. That's your down payment. Sign a mortgage doc, create hundreds of thousands of dollars, go buy real estate. Now, if you rent it, awesome. You open up all these loopholes for, in the book, there's chapters on real estate. There's accelerated bonus depreciation. There's how to collect tax-free rental incomes. You can do the short-term rentals loophole if you're doing Airbnb and wipe out your W-2 paycheck from your job. It's crazy. So there's tons of ways to pay no taxes. Yeah. So you have to start slow. Just start with a little bit, baby steps, learn it. And I mean, I've been doing this for years. This is the best
Yeah.
I've ever found. I
Yeah.
was like,
This is
man, how many hours? How many hours have I spent studying finance? I'm like, at least 60,000, right? And I've definitely put $1 million into figuring this out. Just from resigning from the industry to losing that money to spending $500,000 of my own money to run a company to do this. So I'm in it for $500,000.
Yeah.
And my time was 60,000 hours over the past 20 years. So you don't need to spend 60,000 hours and $500,000. You can just do a little course and take
get the book
or read the book.
That's right.
You can literally read the book and just study it and, grab ChatGPT and say, does this work? Does this work? Does this work? This work? And you could develop your own system and get financially independent. So you have to realize there's ETFs that can build income. They can build huge income streams. There's ETFs who can supercharge the stock market. An exchange traded fund, that could be a podcast on itself.
What's some of your favorites on the top of your head? Your favorite ETFs, would you say? I hear VU. I
don't buy VU.
Okay.
No.
Don't buy VU, not financial advice.
Yeah. So let's take it. All the financial advice. If you hear, go get a job, get an education, get a good job, pay your taxes, save money, get good credit, fund a retirement account so you can retire one day, buy real estate and pay it off quick. All of that is the opposite.
Garbage,
That's rigged. It's rigged. You're becoming you are the money that's making other families wealthy if you follow that advice. The rich are totally doing things opposite. I don't think everyone's suitable for this strategy. You literally have to put the time and energy and money to learning it. If you don't do that, you can mess this up pretty hardcore. I mean, but I got a pretty good system. I spent a lot of time doing it. It works. I got hundreds of people using it. Pretty soon we'll have by the end of this year, I'll probably have 10,000 ordinary Americans using this strategy.
And winning.
And winning. Yeah, winning on a big level. I have people that said, Mark, I'm 52. I think I'm going to work until I die. And I'm like, I look at their assets, restructure. I'm like, hey, retire whenever you want.
Yeah.
So.
Sorry, I'm kind of taking over the podcast, Boo. I'm sorry. I just get really into it. But can I ask just one more question on a follow up? So I'm kind of following the system. Okay, so you buy a house. One of the fears of you borrow against. You borrow against your stock portfolio, your investments. You say you buy a house and, maybe you do it with zero down, whatever. And with the intention of renting it, right? So then it's going to cash flow and you never really put any of your money. Now, here's some of the fears that, I've talked with some friends is the fear of going into real estate and owning a house is market crashes, losing their job, not being able to find a renter, and then you not being able to pay for that mortgage that you borrowed against so you could technically lose everything. What do you say to that? How do you then solve that type of problem? There is a risk with this, yes? Because
there's risk in everything. So the risk is if you don't do this, you might work until you die. Highly likely. And die in a state-funded long-term care facility. That's not cool. Trust me. So that's the risk of not doing anything. You're probably going to live a horrible existence when you're older. And you might live a long time too. That's kind of double sucky, right?
Sad.
So So I'm not trying to freak people out here. I'm just giving you the numbers and statistics. But if you invest in your financial IQ, start about small. Start with $100. Start investing. What happens when I press the borrow button? Oh, you create money. Whoa, I created money. That's weird. Because there's a thinking is just a recycling of the data you've gathered in the past. Just think thinking is just a recycling of the data you've gathered in the past. You can't solve a problem unless you delete all the bad in files. You have to delete all the bad files, unlearn, and then learn.
And then relearn.
You can't do that overnight. You literally have to delete everything you've ever been taught and believe about money. You have to delete it. Start from scratch. If I taught this strategy to an 18-year-old, that's all they know. They just invest, borrow. They don't even question it.
They were well, this makes sense.
Well, what about Dave Ramsey? And what about my financial advisor? And what about my CPA? I'm everyone around you is working until they die. Probably shouldn't take advice from people that are going to work until they die.
Yeah. That's a fact. But I mean, if you do default on the property that you bought using this system, what does one do at that point?
Who cares? Start over. We're called Home Depot loans. Buy a property, primary residence.
You start over again.
Default, just let it go. Who cares? I mean, when you bought a home, they just created a bank entry and lent you nothing. They didn't lend you money. They just created a bank entry. If let's say you lost it, things went bad, they delete the entry and then you ruin your credit, but you can fix your credit pretty fast. It doesn't take that long to fix your credit. You go buy another one. Like
God, okay.
Now, ideally, you don't do that. You actually raise your financial IQ. I'll give you an example. The house that I'm sitting in, okay? I get him to Knoxville, Tennessee. I'm like, we should probably see, like, let's just buy a regular house, $400,000, right? My wife's like, okay, we need 3% down. Cool. $12,000 plus some closing costs. Okay. We said, wait, but we want one to live in and one to rent. So we made sure we could rent the downstairs. Cool. $1,700 a month in rent every month. We pay off a $3,000 mortgage. My payments are $1,300 a month.
Yeah.
That's crazy.
To live in it. Yeah.
Plus, I opened up all these tax codes. Now, we're like, oh, we love Tennessee. Now I'm like, we got to buy some land. So we bought some waterfront land. We're going to use debt to buy a house, build it on the waterfront. And we did everything. We didn't work for the money. Like, if you call this working, I guess I'm working, but it doesn't feel like work.
Got it. But you only put down that 3.5% initially
3%.
of your 3% of your own money.
Yeah.
Got it. Wow. Smart. So now you're building and building and building and wash, rinse, repeat. This is awesome. Yeah. That's smart. Sorry, Jesse, what do you have? What's burning questions do you have? I want to try this system.
Yeah, Mark, I was listening to you in another podcast and you basically said something to the effect of, take me to any financial advisor. I will show you exactly how, by taking their advice, you're going to retire in poverty. And you were a financial advisor, a registered rep for 17 years, almost 2 decades. And like you kind of mentioned earlier, but it's like, okay, like, max out your 401k, like have 6 months of some type of windfall or emergency fund, like, all these kind of things that are cliche that say Dave Ramsey. I was listening to another podcast and they called it like boomernomics, and how, like, a lot of these things have changed. So, why, if you listen to a typical financial advisor, are you going to be in the poorhouse during retirement?
Because the financial advisors don't know how to retire. It's like going to somebody who like I don't know, doesn't know how to drive a car. Every day they get up in the morning, they drive their car into a pole. Yeah. And they're like, oh yeah, can you teach me to drive? They don't know. And it's built that way. Do you really think that the big government and the financial service industry, Wall Street, woke up and said, man, we got to teach all the financial advisors to get rich when they're young and pay no taxes, so then they can teach all of their clients how to get rich and pay no taxes? Do you really think that happened?
Yeah.
Really?
Yeah.
All right. Yeah.
It's like your advisor in high school, who's supposed to advise you on your life, remember? And then, they're earning a $40,000 paycheck being, an advisor in high school.
Yeah, I went to college. I was like,
probably not the best.
About that one too.
Yeah, so. Probably should. Yeah.
Kind of getting back into this buy, borrow, die strategy. I think a lot of people are familiar with like a reverse mortgage. So essentially, you're pulling out you're pulling out money out of the equity of your house, which is, I think is pretty, everyone kind of knows that. But basically, when you're talking about like when you have money in, say, the stock market, you would have SB lock, which is a security backed line of credit. Yep. And like going back to like the Jeff Bezos example, I mean, a lot of these CEOs like Jeff Bezos, say Zuckerberg or Elon Musk, they don't actually make that much of a salary. They're being compensated in stock. So let's just say hypothetically you got $100 billion in stock. You're then using like an SB lock to take out debt using your $100 billion worth of stock as collateral. And then for someone like, say, like Jeff Bezos or Zuckerberg or whoever, they actually never even pay back this loan their entire life, which is the whole, like, we're talking about the borrow part. The die part is they never actually pay this back until their children will inherit their stock, then they have what's called a step up in basis, right? So basically, if hypothetically you we'll just use a house because it's probably easier for people to understand. But you buy a house for $10,000, you die, that house is worth $1 million. You pass that house on to your kid through inheritance. Now all of a sudden the capital gain starts over. So now that kid sells that house at $1 million. He's not paying any capital gains tax because that's what it started out as, right? For him versus the 10,000 for the person that passed on. So basically, I guess the question is like when someone, like, first off, how much money do you really have to do like this SB lock? I mean, do you need to have 100,000, $1 million to really be able to capitalize on it? And then secondly, what do you recommend for people making interest payments or principal? Because if like you kind of called it a margin loan in the book, and if let's just say the market crashes and you have 110% value, you're going to have to start making payments really quick in order to secure your securities.
Yeah. Okay. So S blocks are generally this is how the rich people do it. Some guy has 25 million in his brokerage account at a big bank. The big bank goes, oh, we don't want him to sell the securities because they checking the fee. They go, hey, we'll open up an S block, and they'll give them a credit line, and they can borrow off the credit line. It's actually very expensive too. You can't access an S block as an average individual, right? But you can access margin really easily, and you could do it in your Robinhood account, or M1. So you just need to start investing. When you get over, let's say, $3,000 in your account, you could press there's a borrow button on M1. Yes, you have to borrow it. It's a withdrawal, but you're actually withdrawing margin, and you can do that. So anybody can do it. S blocks. Again, the funny thing is, if you go get an S block, there's an application. They check your credit. You can't adjust your securities when you want without permission from the bank. And it's crazy. All that. And then you get higher interest rates than I'm paying, right? Or you could be paying. You're already paying higher interest rates. So it's a risk-free loan. You can't default. And you're paying. Margin's actually better than even other rich people do it. Like, I'm paying less than interest rates than a guy with a $25 million S block. And there was no application. There's no credit check. Yeah, no application, no credit check. It doesn't report to my credit. And there's no required payments on the loans. I'll never pay back the debt. As it grows, I'll just keep borrowing and buying other assets. I'll never pay back the debt. When I die, there's a huge asset there. There's debt, but who cares? There's a step up in basis. Again, stocks, ETFs, life insurance, real estate, cryptocurrency, gold, and precious metals, they all get a step-up basis. If you're married, it's up to $26 million currently. If you're single, it's $13 million. Teach the kids, buy, borrow, die, your family gets super wealthy.
Wow.
Yeah. So I don't know if it answered all the questions there, but if I missed something, let me know.
Well, it seems so simple when you say it, but it's like, it's just like so mind blowing because it's like, this is not what I know. This is not, it's like you save, you put it in a savings account, have a nest egg, and so it's like really having to rethink the strategy and making these moves. I love your confidence in if you, implement the system within 10 years, you'll have a pretty decent nest egg to where you're not having to worry when you retire. And so it really is just kind of stepping into it, having the courage to incur debt, because I've always been afraid of debt. I try not to have any. And when I did, I was just always so anxious about it. And I paid it off, and I worked my butt off paying off credit card debt and all that. But now, but now it's like, okay, well, what is the next level to now build wealth with what I have, with my nest egg, that kind of thing.
Well, you have to understand, you have to delete everything you've ever learned and start from scratch.
Start from scratch.
Only invest in assets that you can borrow from.
Yeah.
There's a story of a lady in the book. She was an actual student in my course. She had $52,000 in VOO, like index fund. It was at a big broker. That broker charges 13-14% interest on margin. I'm like, that doesn't work, right? But she had tons of credit card debt, 24-26% interest credit card debt. She's like, man, what do I do? Her financial advisor told, sell the stocks, and pay off your credit card debt. I'm like, that's horrible advice. You trigger the taxes when you sell it. All that money you've invested is now gone. You killed the asset. I'm like, hey, move your money over, borrow $22,000 and pay off your credit card debt. She was paying $950 a month towards credit card debt. Predatory credit card debt. So her debt was gone. She's like, I have $950 a month. Takes it, funnels it into her brokerage account. She built wealth. She avoided the tax system. She eliminated bad debt with good debt, right? And she built an asset. Anybody can do it. It's just, it's cool. It's exciting.
If you do borrow against your brokerage account, say, how does it work, like when you have to pay it off? Because when you do borrow, you do have to pay it back, right? You have to make payments.
No, I'll never pay back the debt. I'm not trying to get out of debt. I'm trying to accumulate more debt to buy more assets. I'll give you an example.
Let's do an example. Yeah.
Okay, let me give you an example. Okay, let's say we all came from elite families. Jesse, Kai, we all came from elite wealthy families, and we all inherited $10 million from our rich uncle or parents, right? Boom, we all got 10 million. I'm like, hey, got an idea. Let's never work and never pay taxes. Are we in? Does that sound like a good idea? You guys in? All right, cool. Here's what we'll do. We'll take our 10 million and we'll buy 10 stocks that we love every day. Use Google, Amazon, Costco, Visa, Exxon, Nvidia, blah, blah, blah. Just 10 stocks that you use every day. Put it in the market. 10 million. If it makes 10% rate of return, which it'll make more than that, let's say 10%, it doubles every 7 years. Okay. So 7 years later, we all have 20 million. We're like, whoa, we literally did nothing and we have 20 million. We didn't pay taxes. 7 years later, 40 million. 7 years later, 80 million. 7 years later, $160 million. I'm like, but how are we going to live? Take a margin loan for $15,000 a month every month to send it to your bank account. You never work, you never pay taxes, and you can give yourself a huge raise every single year, live the rest of your life, never work, and you'll never pay a penny in taxes because you didn't work. That's it. So scale it. You don't have 10 million? Great. Start with $100 and scale it up. And then raise your financial IQ and learn how real estate can wipe out all your taxes. Baby steps in real estate, and buy real estate in a desirable, low-taxed state where lots of money's moving. There's a strategic reason why I'm living in Knoxville, Tennessee.
Yeah.
Okay. So
yeah,
strategically, it is. And then, so yeah.
How did you go about researching that Tennessee was that place that a lot of money is, you just sort of, yeah.
I was in California for 25 years. Everybody moved. I was like, man, I'm like the last entrepreneur in California right now. Right. So I'm like, okay, where'd everybody move? I was Austin, Texas. Okay, I was like, it's kind of hot there.
Florida. Mm-hmm.
Florida. My sister, a bunch of people moved to Florida. I was like, kind of humid. I was like, all right, my brother's in Canada. My sister's in Florida, right in the middle. Had some friends that moved here, bought a bunch of real estate. Like, let's go to Knoxville, Tennessee. Love it here.
Let's talk about like your students. Like some of your students are doing this system and getting out of debt, getting themselves out of debt?
Yeah, I hate debt. I don't love debt.
Like the credit card debt, the bad debt.
Yeah, the credit card debt, hate all that stuff. The first thing you want to do is eliminate all the bad assets, get rid of your habits. If you want to go buy an iPhone, you're like, I need to buy an iPhone. I really want the new iPhone. Great. Invest $3,000, press the borrow button, go buy your iPhone. At least you built a $3,000 asset first. You bought your iPhone with money you didn't have to work for. You didn't have to pay taxes. And you fought inflation with it. So you didn't have to spend your time fighting inflation to spend that money to go earn it. And just try it. Nothing's going to explode. The world's not going to end. You get a margin call and it says, man, I got to add $50 to my brokerage account. Otherwise, I'm going to get a margin call. Worst case scenario, maybe you'll sell it. You either put the $50 in, you're good. You're going to learn something and you raised your financial IQ. And you need to learn to become a sophisticated investor. Okay. Here's the crazy part. If you understand this one concept and work on it, you're already smarter than 99% of the financial advisors. That's crazy.
Whoa. Yeah.
Yeah.
I almost like want to try it with like, either an item or, a trip or something and sort of like try the, borrow against the margin just to try, just to get your feet, even if it was like, a few $1,000s you borrow against it.
Yeah, I'm like, don't people like people donate like tied to their church, right? Like I'm putting 10,000 a year to this church. I'm like, cool. Don't do your money. Invest it, borrow the money every month, donate that to the church. That's a double tax deduction, and you still have the money invested. Wow, the government owes you money. That's the biggest. You donated to your church, tithe, built your wealth, and got a double tax deduction. Thank you to the U.S. government tax system. I didn't build it.
Yeah, and you would then deduct that off of your say you have a W-2, you then can deduct that. So essentially, with your W-2, you can shrink it down to where you don't pay taxes at all on your W-2.
You could. There's itemizing deductions, not to go into the weeds or whatever, but
Okay.
you have a standard deduction at the bottom. Unless you're itemizing it. If you're a business owner, you buy real estate, you're itemizing everything. And my margin interest costs, that's a write-off, right? My real estate stuff, I have accelerated and bonus depreciation on real estate when I'm renting it, which is like a cheat code for pay no taxes, stuff like that. So you gotta spend the time in it. Like I said, if somebody's gonna read the book and just spend 100 hours this year just learning it.
Just learning it.
Because you have to delete the old files. It is a lot of work. You got to delete everything you've ever learned.
All the fears.
Replace it with the correct files.
That's right. Yeah, that's right. Jesse already read the book. I know, but he invited me to come. I haven't read the book. I'm going to read the book.
Basically, the system's not going to change. I always find it interesting when people are like fighting against like taxes or like, oh, like the system's broken, man. Like capitalism sucks, whatever. It's like playing the game of Monopoly. Like maybe you don't like the rules of the game, but you're not going to change the rules of the game. So you have to learn the rules of the game so you could actually play the game and win the game. Or it's like, we've been watching the TV show Survivor. I don't know if you've ever seen the TV show Survivor, but especially in like the early seasons. But yeah, they're always like, I played, I have integrity. I played a game. It's like, that's not the game. Like, shut the fuck up and like man up, vote someone off the island. Like, this is how the game is played. Like, doesn't mean you're a bad person. It just means you're playing the game. And then when like you're talking about like Dave Ramsey, I mean, it's just basically like, okay, like, yeah, like you go to Starbucks every morning, like bad decision, make coffee at home, like, cut up the credit card, like if, you're paying too much for your grandma, like throw your grandma out of the house because you can't afford that. You're paying her on credit card. Like everything he says is like really bad advice, but he's like, you're not going to change the system. Like use the change. Like what do billionaires do? Buy, borrow, die. Like just use the system against itself.
Yeah.
Absolutely. I mean, I think if somebody learns Dave Ramsey, run it for a while and try this out and figure which one's better for you. Like you can go to, if let's say you're like, I love my Starbucks, I have to have my coffee. Okay. Let's say you spent $100 a month on coffee. So force yourself to invest $1,000, press the borrow button, send $100 to your bank account, go buy your coffee. That's a better way to do it. Build the asset first and then borrow the money and pay your expenses. Wow. I mean, I think it's like, and then taxes. Okay. Let's call it what it is. The Democratic Party is like, oh, tax the rich. Every time they can close the loopholes, they don't. They could have closed the backdoor Roth IRA. They didn't. The coronavirus stimulus bill doubled the amount you can shelter into life insurance policies. Oops, slipped that in the bill. Oh, I'm glad nobody read it before we signed it. You think Nancy Pelosi's gonna trigger tax the rich when her portfolios she would tax herself? No, they're not.
Yeah.
The tax codes are never going to change because all the donors are using the strategies.
The same strategy.
And both sides, Republicans, Democrats, they're all in the same boat. They all know how they learn Bible or die and they go, holy crap, I can do it too. They'll never change it. That's the best part. Everything I teach is federal tax codes that your politicians are using. They're never going to change them. And as far as doing good in the world, I'll become a billionaire doing this, but I'm going to help millions of people stay out of poverty. I think I'm
Let's go.
I'm going to fund churches and charities and all that cool stuff. Right. So like, I'm going to get super rich. We're shopping like we need a jet for the perfect portfolio. Right. Because we want to. right? But we're going to do good in the world and whatever. Like, I don't care. I'm not trying to be liked by everyone. I never like, I just don't care. I know I'm doing the right thing. I wake up excited every day. Me and my wife both work from home. She's in real estate. I'm in tax avoidance, loving it, helping people get financially independent and keeping people from falling into poverty. That's fun.
And you can also write that jet off as on your taxes. But I mean, the biggest expense people have in their lifetime is taxes. It's like, okay, you can get a second job or just actually like pay less taxes legally, right?
Yeah.
I mean, there's a difference between tax avoidance and kind of, tax mitigation, whatever.
Yeah, if I wanted to wipe out a huge tax bill, you know what I would do? I'd upgrade my Tesla to a Cybertruck. That's the Section 179 deduction. And if I had a big tax liability, I'd literally go buy a Cirrus jet. It's like a $2.6 million tax deduction for me. It's crazy. It's like, and I'd buy a private jet. Right? That's nuts. And then I can buy real estate. I can use accelerated and bonus depreciation to wipe out all forms of taxes. And what did I do? I bought real estate. I used the tax codes, bought a jet and a Cybertruck. And I got rewarded by the government. They paid for most of it. I'm like,
that's crazy. Yeah. Of course they all use it. Of course the politicians all use this.
But I come from nothing. Like I grew up in poverty. I've done bricklaying, worked in factories, security guards. I've painted pipes in Ottawa when it was like 40 below zero freezing. I've been like almost homeless once. I've been robbed many times in Los Angeles because I grew up in a gang-infested neighborhood for a bunch of years. Like I come from nothing, so anybody can do this. I wrote the book. It's dedicated to like ordinary workers, construction workers and HVAC workers and security guards and college dropouts like me.
That's amazing. That's amazing. Let's talk about the backdoor Roth. Is that something we can go over? What is the backdoor Roth like? I think I see it on social media every once in a while, like, do this, but I never want to trust the some of these like 20-year-old influencers, but maybe they're onto something. I'm not sure. Pray tell, or maybe not, but pray tell this backdoor Roth.
Roths are cool, but I can't borrow from them. So it's a deal killer for me. Because if I fund a Roth, I can't take a loan from it. That's dead money. It's a deal killer for me.
Okay.
Now, if somebody has a large investment account, they have a 401k or IRA, that's tax deferred. The bigger returns, the bigger the tax penalty. So you have to convert that. So backdoor Roth is you can't fund a Roth if you make too much money. You can either fund an IRA, non-deductible IRA if your income is too high, and then convert it to a Roth. So it's it's a backdoor to getting money in a Roth. But again, deal killer. I can't borrow from it. I don't invest in it. So to me, all retirement accounts aren't useful. I mean, they're called retirement accounts, but who called them a retirement account? That's something to think about.
That's a good trivia. We should find out. Yeah. But I have a 401k. So but with a company match, does that mean that I shouldn't take advantage of the company match? Because I thought of it as like,
maybe your company, it matches you in a Roth though. You're not actually choosing a.
Well, if you're gonna match, put your money in the Roth portion, and then the other portion's tax deferred. Split it. But again, it's all dead money. Your Roth and your 401k, dead money. You can't.
So you're saying it's better to just put it in a brokerage account in Vanguard, and I can borrow against.
I can't give financial advice. Raise your financial IQ, and then you can decide.
Well, he's also not saying Vanguard though, because Vanguard you can't do the margin.
There's no borrow button. There's no way.
There's no borrow button.
There's no borrow button. Right.
Sorry, but a brokerage account.
You can buy Vanguard funds in the brokerage. You can buy any ETF, and you can just buy borrow die with it. So again, it's all in the book. Trust me. The book is 400 pages. I've never written a book 400 pages. It's got a glossary. It's got all the stuff, the terms. This is a lot of work. Like
how many millionaires have you created through this system? How many are honestly retired and golfing?
There's quite a lot of people that don't work. Like they even start Instagram channels because they're like, man, I don't work because of the perfect portfolio. I'm going to promote it. So we have a bunch of those. Our goal was pretty clear. I said, I'm going to create 1 million new millionaires. That was my goal. We didn't even know what the company was called. I was like, this is what we're going to do. 100%. I think it'll take us 5 years to create 1 million new millionaires.
1 million millionaires.
From this. Yeah. So give me 5 years. I think we'll be at 1 million new millionaires.
And let's say, when did you start?
We started the company about 4 years ago, and I literally, during coronavirus, if you go back to my Instagram channel, I put a triple short on the market when coronavirus was going down, so I was making money on the down.
Oh, wow. Yeah.
I kind of spotted the bottom. I'm like,
Probably crushed it.
I was kind of skeptical about this whole COVID thing. I was like, this seems a little sketchy right here. Like, I think it's BS. I think it's crap. I think it's pharmaceutical companies that just want to steal everyone's money and give it to pharmaceuticals. I was like, that's probably likely. So it hit the bottom. You can just like go to my positions. What I bought there, I was making tons of money. I went on Instagram, taught people, and people were like, you need to start a financial education company. I got nothing else to do. So I wrote my third book and started the company. And then it was the email saying, hey, can you write a book on this topic? I guess 11 months ago, maybe a year ago, something like that.
Mark, we were talking about like IRAs and whatnot. I've done a few podcasts with some like retirement, financial professional or professors and professionals. But basically, like you're talking about, like as soon as you turn 73, and I think it used to be like 70 and a half, you have what they call the RMDs, which is basically a required minimum distribution. So you are forced to take money out of your retirement account, and then depending on what your Social Security payment is and what your income is, then all of a sudden you could be taxed up to 85%. And then the pain doesn't stop there. The pain continues because you're forced to pull this money out, which means that what you pay for Medicare, your Medicare premiums could also go up. So it's like you're like we all were talking, like in the future, will tax rate be higher than what it is now? Yeah, probably. But even if it's not, the fact that you're forced to pull this out, and then your Medicare premiums, and like there's just so many negatives to being forced to pull this money out.
It's completely rigged. Okay, so let me break this down for you really quick. So Social Security was promised to be never taxable to us. They said, hey, put your money in Social Security, never going to be taxed. In 1983, they said, hey, we're just going to tax it a little bit, but it's only going to be the rich people. Like, oh, yeah, that's all right. Well, it's only going to be the people with lots of money, so no worries. 93, they're like, oh, we should jack it up to 85%. Okay, so, but it's only if you make provisional income. Ooh, provisional income. What's provisional? If you work or you defer income. Oh, let's create the 401k. Okay, so they create the 401k, and then it's tax deferred. So it's deferring taxable income. It's the highest form of income. You're deferring it, and every time you take it out, you're taxed at the highest rate of taxation. Okay, so what that did, it triggered the taxation on the Social Security. So the Social Security is a tax. The 401k is tax deferral. You're supposed to be in a higher tax bracket, but as soon as you take a bunch of money out of the 401k, it triggers the taxes on your Social Security and pushes you into a high tax bracket. Now, if you're a good investor and you're growing it, the required minimum distributions are calculated every single year. If you're a good investor, the government takes more, and when you die, you get to pass all those tax problems to your kids. So I suggest buy, borrow, die if you like your kids. If you don't like your kids, pass them a retirement account.
Another thing, Mark, is like, I say a big theme of the book is kind of like, what is the real rate of inflation? Like the inflation, whatever they're saying, was it the Federal Reserve shoots for like 2%, 3% a year, which of course it never shoots. I mean, I think in some of the years during the pandemic, we were in double digits. Of course, that's never reported. But the fact is, if you're getting 5% return and the inflation is 7%, I mean, you're losing money every year. So in order to have a good investment, not only do you have to be making money, but you have to be making more money than what the interest would be on, say, that loan, plus whatever the interest is on what you consider inflation, or whatever, how you'd factor that in. But and first off, what is the actual interest rate we've been paying since they started printing all this money going back to the 2008 global financial crisis?
I haven't really looked at the exact numbers, but real inflation is whatever the government says, add 40% of it. Add 40% to it. Because if they increase the money supply on average 6% per year, the inflation is going to be about 6%, right? So they've been doing that forever, about 6 to 7% per year, just increasing the money supply. So your inflation, but it's more than that because they print the money, but then the government, the banks create trillions of dollars in computers, and that's more inflation. So you really have to, the thing is, inflation is awesome if you're using buy, borrow, die. I take fake currency called US dollars. I call it toilet paper money. Take the toilet paper money because if you invest in toilet paper, it goes up and your dollars go down. So it's toilet paper money, right? Like, that's fake. I can create it in computers pressing buttons. Okay. So cool. So take that and buy assets. Real estate makes money with inflation. Stocks make money with inflation. Gold and precious metals make money with inflation. Cryptocurrency makes money with inflation. The more incompetent the government is, the more money the rich people get. And as their assets grow, they just keep buying and borrowing and paying no taxes. So the rich get rich with inflation, the poor get poor. Inflation transfers the wealth from the poorest people on the planet and transfers it to Wall Street and big government and the people who understand buy, borrow, die. All the wealth transfer from them. So when a government's printing money, they're literally impoverishing the world to enrich the elites and the people that understand wealth, like the people that understand buy, borrow, die. So there it is.
Wow.
Yeah. Government's like, we'll call it, let's not call it printing money. That's bad. Let's call it expanding the money supply. That sounds cool.
Yeah. I've all my conspiracy theories are like, of what happened from 2020 and on.
Yeah.
That's probably, and on all the money that we're spending, is probably to print more and more money, to have a reason to print more and more money just to continue doing this wealth transfer.
Yeah.
I'm not gonna lie. I'm not the most financially literate. That's why I sort of came on and I asked the most basic questions. But I want to go back to real estate because I'm incredibly interested in it. But let's say like you borrow against your investments, you buy the home, and now you have costs to like upkeep of the house. Let's say your tenants break stuff and now you have to pay, you pay part of the rent or part of the mortgage. Your tenant pays part of the mortgage, but then there's like, hey, this wall broke or appliances and things like that. Do you then borrow more money off of, do you hit the M1? You borrow more money to pay the repairs and just keep borrowing. You don't really pay with your own money.
Again, start with baby steps. Start investing and earning buy, borrow, die. Build a foundation. Yeah. And then look, all right, cool, got to get some real estate. But if you don't own a home and you're renting, try and get a home. That's the basic. That's the baby steps.
That's
so
the
that in the
baby
future,
step.
you can rent that home as you're raising your financial IQ. So.
Got it.
Now, Jesse, you've had. I was watching your podcast. Like, you've had other people that kind of touch on this a little bit. I don't know if you read the book. So, what's your thoughts on other podcasters? Because I know you've been talking about this a little bit.
In terms of the buy, borrow, die, or just the
I don't think your podcast actually mentioned buy, borrow, die because I never heard the term buy, borrow, die. I was in the financial industry. I wrote 3 books, and I've never heard of the thing buy, borrow, die. I was like, that's so interesting, right? So,
I mean, I was on a kick for a while where I was reading a lot of like these money laundering books, and then I was reading books on money laundering led me into kind of like offshore, so like how the wealthy protect their money. And I don't know if you know who Mark Moss is.
Oh yeah, totally. Mark's great.
So we were living in Puerto Rico, and a lot of people moved to Puerto Rico because they wanted to get Act 60. We were there, Kayak Act 60. And so they were trying, people were moving there to avoid taxes. And so I was kind of like, when I was there, I was reading all these books. And of course, and then Mark ended up coming back. And then he basically did this like this episode on basically like, oh, you don't actually have to move to Puerto Rico to get the tax benefits
to pay zero taxes.
And then you essentially, he's like, I was talking to some advisors. He never actually said what it was, but it was just a buy, borrow, die. And then, he's moving money into different trust, whatever, to, revocable trust, things like that. But I was reading this for a long time because I read all these books on these billionaires like Jeff Bezos and Zuckerberg, and they were all doing the buy, borrow, die. And then it just made sense because it's like, yeah, you're paying yourself in stock instead of a salary. You're only paying taxes when you sell the stock. Debt is not actually taxable. And then, so like, let's just say you do a 20, you sell your stock, get a capital gains as 20%. So basically, if you just take 20% of the money, you borrow 20% of your stock, that's essentially like 20% of money that you get for free. And then when you die, you have the step up in basis. And all these billionaires have like a dozen kids. I mean, how many kids does Bezos have? Or not Bezos, I mean, Elon Musk. Yeah, Elon have. So it's like, essentially, it's about as free money as you're going to get. But like I said, I always think when people are always like, oh, tax the rich, blah, blah, blah. It's just like, we're all playing the game of Monopoly. If you choose not to play the game of Monopoly, you will be poor. And if you think that you're gonna fight the man, like you're gonna stand up to the man or whatever, you're standing up to the system, you're just a fucking moron. Or you're just rich and you don't like, there's a lot of, I lived in a lot of affluent ski towns, and in Puerto Rico we were talking, like we had a lot of billionaire friends, and like a lot of the kids, I mean, like they have no idea how anything works, and yet they're rich. But they're like bashing the system that made them rich, just like, okay, like, give your money to me and then you can go like be homeless. And like, if you're so sick of the system, like just give me your cash. And,
yeah.
But I mean, ultimately I think like, what you're talking about, like if you have $1 million, obviously like it's really easy to implement this system. Like what Kai's talking about, you're starting with $2,000. I mean, you can't just go like, get $2,000 or dollars, borrow $50,000 against it because you don't actually have $50,000. But you have to start right. You start small, make that like you basically mentioned in the end of the book. Like get asset A, borrow from asset A to get asset B, borrow from asset B to get to asset C, and then you go all the way down to like asset Z. Like so, it's a step. Bezos' kids were already at asset Z. They already have the billion. So like for them, it's just a different strategy. But the bottom line is, what's your highest taxes? The average, if you're a worker, you're paying payroll and you're paying income taxes, paying property taxes. If you're not doing, like, you're basically losing. And then, sales tax, sin tax, like 70% of your check has gone to taxes. Like, how do you get that number down as far as you can? You use the tax code. And so I always wanted to know more about this stuff because it's Mark Moss always says, success leaves clues. So just use the clues and do it yourself, but you can't do it at a billionaire level when you're not a billionaire, but do it at as someone that has $2,000, and do it as someone that has $4,000, and then 4,000 is 40,000, 40,000 is 400. But people just want to be rich in a day, and you can't get rich in a day. But
I would so let's say you put 15, let's say you had 15 grand and you bought Nvidia stock 10 years ago, you're worth like 3.6 million right now. So you don't think there's stocks right now in quantum computing and AI that you could do the same thing and be worth 3.6 million? Once you have 3.6 million, what if your average gain is 400 grand a year? You're like, man, I can make 400 grand a year. What are we sitting on my couch? I'm going to live on 10,000 a month. There you go. You're retired on 15 grand. You don't think there's stocks out there like that I'm investing into that are going to do that? Of course there is, right? And it's simple. Just pick the things you use. You're probably using AI, so you probably pick up some AI stocks. If you're using Amazon, hey, that might be a good stock to buy. Before you go shopping on Amazon, buy some Amazon stock, press the button, and then go shopping on Amazon.
Yeah.
I mean, like, just build a system, right? The idea is
awesome.
Invest first and then your lifestyle. But my life, if I borrow and I go to Bitcoin 2025, right, cost me $3,000. I borrowed it. I didn't work for it. That's a $3,000 tax deduction. I enjoyed the trip, nice hotel, dinners, whatever, total tax deduction. The government owes me money. And I went to Bitcoin 2024 or 20. I've done to 24. I'll be at 2025. Mark Moss is even speaking it there again. So invest in your financial education, build your life around business ownership, real estate, buy, borrow, die, and you can have a fantastic life. You can retire young, you can retire early, and if you teach it to other people, you can make a big difference in the world.
Curious to know if you can do the same strategy with with crypto and Bitcoin? Like, do you then also borrow against your Bitcoin, and use this same exact strategy? Do you consistently buy Bitcoin, and sort of do dollar cost averaging as one of your strategies?
Yeah, for sure, for sure. I like Bitcoin ETFs. Like if I get, it's expensive to borrow against Bitcoin. You have to use salt lending. Again, the chapters are in the book on how to do this. I use Bitcoin ETFs, so I can buy MicroStrategy's stock, where I can buy high, option, but and again, all stuff's in the book. But yeah, I want to buy and borrow, but you got to be, that's dangerous because the Bitcoin can crash like huge and surge. So you got to be careful on that one. You got to be a little bit conservative on that one. But I think Bitcoin's going to be at $1 million a Bitcoin by 2032. So it's probably a good investment.
Yeah. Yeah.
Yeah. So yeah, you can do, again, I just asked myself question. If I can buy this asset, if I can't borrow from it, I'm not going to do it.
Yeah,
it's got to be simple. It's dead money. Don't kill your money, and invest in your financial IQ. Spend at least 100 hours this year learning it. That's what I would say people need to do. It's not for everybody, but it's better than working until you die and getting paid and paying millions of dollars in taxes and passing that bad advice to your kids.
Mark, kind of big final question for me, which is just, like I used to personal train and be big, I got a master's in health and fitness, and I used to work with like pretty elite athletes and whatnot. And there's always like a few things that someone does that really keeps them from ever kind of like reaching the next level. Like I used to have like a client that would drink literally a gallon of orange juice a day, because he was told that like, oh, you need to get your vitamin C. And it's just like, okay, you're wondering why you're 40 pounds overweight. Like, but there's a few things that like just modifying a few things and make a massive results, right? What would be like just a handful of things that the average person does that if it would make like the biggest impact for the least amount of kind of suffering, so to speak?
Good question. Evaluate the effectiveness of your retirement accounts. Okay. Question things like you really need to question what you believe. Okay. Like where did that information come from? Who created the word financial advisor? Who created the word fiduciary? Who created the word retirement account? Well, was their objective to help everyone get financially free so they can go out and do whatever they want every day and think freely? Are you really free? Question, are you actually free? Like literally think about that. Are you free? Can you do whatever you want? Can you say what you want? Can you think how you want without repercussions, right? If you're not free. Well, what's the opposite of freedom? You can think about that, right? So for me, I'm only willing to live my life on these terms. I do whatever I want. I say whatever I want. I live how I want. I'm using the tax strategy that billionaires use, and I'm teaching ordinary Americans to do it. So I don't give it a shot. Check it out. Try it out. Kick the tires on it. See if it's fun, right? It's awesome, right? Go to Bitcoin 2024. The government pays for it. I'm like, that's pretty cool.
That's crazy. Yeah, I'm blown away. I was so grateful that I heard this.
Yeah, you're talking about like jargon, it's like where Wall Street uses these specific words to basically confuse you, but it's like any field, it's like the medical field where it's like you say like, or distal or whatever. It's like, okay, so it's like away from the body. I mean, like, let's just say, like, let's make people sound smart, but like finance is like, they really do that with finance where they try to take these simple concepts and make it like a lot more difficult than it really should be to confuse you.
Yeah. The system is really built so you're not going to win. So you need help. You're dependent on other people or whatever. It's all garbage. Just get a brokerage account, learn it. You don't need a financial advisor. You can run circles around your CPA. You just don't need it. Like you can do so much better. If you spent 20 hours this year learning it, you can do so much better than everybody else, right? And it's the system that billionaires use, so probably use that one.
Yeah.
Use the system that everyone fails. Like, I'm going to use the system where like 99.9% of the people fail, or I could use the system that billionaires use, and I know I can do that. Like, pick one.
Yeah.
You're either making other families wealthy with your money, or using your money to build your wealth for your family. That's it. Make it.
I love it. Time to stop sucking at life.
That's a good one.
or being a sucker, being suckered. Yeah, mind-blowing stuff. Man, I'm so grateful, Mark. Thanks so much for coming.
Today's guest has been Mark Quann, who's the founder of the Perfect Portfolio, who's a tax strategist, author of a couple of books we talked about, the top 10 ways to avoid taxes, and his latest book, which is Be Smart, Pay Zero Taxes. So, Mark, where can people find you, get a hold of your books, get a hold of you at the Perfect Portfolio? I know you have a YouTube channel. You can kind of direct people to those sources. And then after that, just leave us with a final thought related to this podcast or whatever is on your mind.
Yeah, definitely. ThePerfectPortfolio.com is our website. We have tons of content there, books, videos, all cool, great stuff. So ThePerfectPortfolio.com, obviously get the book on Amazon. We have it on Audible, all the formats right now. We finally got that done. And just raise your financial IQ a little bit every single day. Just do it and cut out the noise. Like all these YouTubers and whatever, just selling stuff or whatever. And just start it, man. Start your own buy, borrow, die strategy. Throw $100 in there, see what happens, right? Throw $50 a week in there and let it go and watch it do it. Well, you can literally go to my YouTube channel and see the positions that I hold in my brokerage account. There's a link where to set it up. Everything is done for you. You just roll with it and spend some time doing it. And I think it'll change your life. It changed my life. And the financial services didn't. It made it worse, I think, in many ways. But this is a life-changing system. I mean, the book, people are reading the book, they're loving it. People either love it or hate it. They're like, that's cool. I mean, I'm fine with that. So
yeah, it's exciting. And you're so energetic about it. I mean, that's something. So it's exciting. I'm excited to try it. I'm excited to read this book. Thank you, Mark.
Yeah, well, reach out if you get stuck on something, but yeah, just dig into it and have some fun with it.
My dear friends, that is it for this episode of El Podcast. Once again, if you're not yet subscribed, please subscribe on YouTube as well as Rumble. You can also find us on Spotify and Apple Podcasts or wherever you get your podcasts from. We thank you all from the bottom of our hearts for watching and listening, and we will see you on the next episode.